What's up, y'all? This class, we're going to be going over scalping, day trading, swing trading. I'm going to run through some examples on SPY of trades that I took this week, scalp swings and day trades. I'm going to go over a trade I took today that I lost on, what I learned from that loss, what I could have done differently. And I realized it almost immediately, which is a big part of trading successfully, is being able to learn from yourself pretty quickly. Excuse my dog in the background running around. But we're going to go over that. We're going to go over some of the pros and cons of day trading, swing trading, scalping. So, you can figure out which path is kind of the best for you. I personally like to do all of them. I like having the flexibility to do whatever suits my needs at that time or whatever I feel like doing or have most comfortable with. And then with the environment and the market and the way the markets move, you have news events, you have earnings, you have periods of higher volatility, where you want to be more able to, day trade that, right? You don't really want to swing too much when the volatilities increase because everything is moving crazy, right? You want to get the days where you have the big pops, the big drops, and go ahead and make your money. So let's start off with looking at SPY, right? And we're going to start off with a scalp, okay? So this is a scalp I took, sent the channel, sent it out in the Discord, right? We saw this ascending triangle. And if you're not familiar with the patterns, it's all right. There's other videos. There's more classes where we'll go over patterns and break them down deeper. But if you are familiar with it, then you'll know it's ascending triangle is a pattern that's you're looking for bullish continuation, right? And so you have your move up. You have a support trend line, which is this, right? Connecting our higher lows together. And then you have a horizontal or flat resistance, right? And so those two combined are what are going to give you your ascending triangle. Okay. So when you have that ascending triangle, I'm looking for breakout, retest, and a continuation. All right. And so for my scalp, although I could day trade this, I waited for the break of this ascending triangle. All right. I waited for a pullback to retest it, which happened here. And I got in my calls. It started moving up. And because I knew I didn't want to be in the trade for long, I use the trailing stop to manage the trade, right? And I use the percentage trailing stop. So what that means is as I moved up and profit on the trade, I used the stop market order and moved that up as well to adjust for if the trade pulls back, okay? So that's looking like in the trade, say we go up right here, I'm up 10%, right? I'm putting in a stop market order at 0% so that, or my break even, so that if the trade pulls back, I'm pulled out at break even. I'm not taking a loss, right? As we continue to move up, say we're now here, 20%, moving that stop loss up to 10%, so that now if it pulls back, if I go to the bathroom, go get some water, if I'm driving, right? Then that way is good. I think I was having a bunch of meetings and calls that day. So being able to use that as a tool is going to be able to protect me and my scalps. And that was that trade, right? Real quick and simple. I ended up coming back and retesting this level, and I did actually re-enter this trade again after it came back and bounced off. But that was the scalp, right? Just looking at the breakout, trading on a pullback and retest, and it continued off. I'm gonna talk about that a little bit too, right? Because these all apply to any time frame. Right now, I was trading on a 1 minute, and you see I trade on 1 minute a lot. But what is the breakout, right? This is the breakout candle. What's a retest and why am I looking at the retest? Because usually after we have big moves, we get pullbacks, right? And you want to enter on the pullback, not the big move. There's a couple of reasons for this. One, if you're trading options, then especially 0 DTE, right? Timing is super critical because on a 0 DTE or same day expiration, data is knocking at your door and it's just banging at your door, trying to take some of your money out your contract, all right, the whole day, okay? So one, I wanna make sure my timing is good, right? So I'm gonna wait for an opportunity for a pullback down, and that can be the difference between 5-10 cents in your premium, waiting not only on time to pass, but also for the price to come back down, right? So now you're getting a better price on your contract because of Delta. You're also getting a better price on your contract due to Theta, right? The other thing is you'll have a lot of fake outs where you can have a move, and I got caught on that today. I didn't listen to my rule, where you'll have a breakout and then it just shoots back down, right? So what I'm looking for is the breakout for it to retest, and that retest, that pull back to the breakout level, after we continue green off of that, right? So I really like to take out another high, but I like to also snipe that bottom. All right. So as soon as it tags that, I'm like, okay, cool, I can get in. And if it breaks back down and comes back in here, I can close that. Because I'm like, okay, that breakout failed. This level didn't hold as support. I'm getting out. Right. So let's continue. That was the scalp. As far as scalping, for me, when I'm looking at scalping, it's usually when I'm trying to just do something real quick. I'm usually going to put on a little bit of a bigger position size because I'm looking for a quicker move, smaller profit percentage-wise, smaller move in the market. And I'm just, hey, cool, 10% on that, 15%. No more than maybe 10, 15 minutes tops on the trade, if that. Most of my scalps, true scalps, end up being 2 to 3 minutes. All right, and sometimes I'll even break it down to a 30-second chart. So I'm not looking for a long move. I'm looking to get in right here and catch that. Boom. Those three are good enough, right? And that's the whole scalping. And when you're looking at whether or not you want to scalp, it's really effective if you're working full time or you have a lot of stuff going on, but you have certain blocks of time where you can be fully focused on the chart. Right. So if during your lunch breaks, when I used to work my full-time job, lunch, I'd be on the charts. Right. And so that I hadn't developed a skill for scalping as much then, but that was an opportunity where I could go ahead and, oh, cool, I just need 5 minutes, 10 minutes. Right. I could flip through my charts until I find a setup that'll give me a nice move in 5, 10 minutes. All right. So let's go to the next example. And that is a swing trade I took on SPY right here. And I took this on a 15-minute time frame. So took a swing trade on SPY, called it out in the group as a official signal. 389 calls, 317 expiration, 286 was the premium, and I got filled on the trade at 2:27 p.m. Okay, or 2:26, I think it might have been, but 2:27. So the reasoning behind this trade. Well, first, I zoom out. All right, we see that SPY has had this huge drop off. All right, so at this point, from this high, we have moved all the way down to about 6% down. We came back up. All right, so now we're resting about $20 down, 4% down. All right, but huge drop. So we're still pretty oversold. Okay. The second thing that stands out to me is when I'm looking at this, is that we made a low here, but then after that, we didn't come back down here, right? And so you see before, if you're familiar with trend, right, you understand swing highs and swing lows. And you see that every time we have a new low, right, the market moves up and down, right? So every time we have a new low, high comes up, right? And then we make a new move down, and then we get another high, another low, right? So we make these little movements, right? So all I'm looking at is that fact that these lows continuously get lower and lower and lower, right? What does that mean? That means that the bears are in control, right? If the lows keep getting lower, the bulls try to push it back up, especially with the lower highs, right? Lows getting lower means that bears are coming through swinging, right? I think about it kind of like a boxing match between the bulls and the bears. If we're making lower lows, that means when the bears get the upper hand, they throwing haymakers and they're hitting, they're landing, right? If we're making higher highs, like over here, right, where our highs are getting higher, and continuously making new highs, another new high, right? That's when the bulls are throwing haymakers and they hit, right? And when the lows aren't getting higher, as you see these lows, when they comes back and makes a little move back down, a little move back down, a little move back down, those lows aren't getting lower. That means that the bear is not swinging back, right? We just going up. So with this, cool, right? I see we've been making this move down. nice solid downtrend. We come down, hit this level, all right? And then we start having our lows get a little higher, kind of start floating around, right? But no longer is the selling pressure as strong as it was before, okay? So for me to recognize that the selling pressure is no longer holding up, we're no longer pushing down here like we were before. All right, I'm like, okay, cool. Now I'm anticipating a potential reversal where we can start getting a move back up because the bulls are no longer losing to the bears. All right. In this time frame, in this time period, they've at least got to the point where they can defend, right? So come out, we gap up, we move up, move back down, move back up towards the end of the day. All right. Boom, drop right back down. Even after this drop, we're still holding this area. All right. So this whole area right here between 384 to about 385, 60, we'll call it. We keep coming down into this area and we respecting it. All right. So this is where the bulls are coming back into it. All right. Even right here, we get a little bounce out and we think it's over. And then, it just comes right back. And so that's what really led me to think, okay, cool, we're actually holding this. And the market is now looking like it's kind of wanting to fake some people out. Right. So I'm seeing this, I'm looking at it on that day, which is the 15th. And as I'm looking at it, I see we have high day established here. We come back up, fail to get back to higher day, come back up, fail to get to higher day, new low of day, and then we start pushing back up. And so at this point, I'm expecting for us to possibly zoom in a little bit, expecting us to possibly go back and reject it again, right? We see that we came here and moved down. We see that we hit it again and moved down. All right, and so now I'm expecting that to happen again, right? We know price usually is going to repeat itself. So it's just moving in this range, consolidating up and down in this box, which is tradable, right? But I'm not really trying to trade that right now. I'm trying to find a swing. So with that, we get our next candle, right? And our next candle ends up taking out the highs and closing above the highs, okay? So granted, I like to wait on this pullback. I see your question, Bella. I'm gonna get to the questions. So granted, I like to wait on the pullback after, like we just talked about. And there we got, right? We got it on that candle. So I went ahead and took the trade after we got these candles coming in. All right, 227. I took that trade around somewhere in this candle when we got the pullback. Okay. So that was my basis behind swing and SPY calls. I got a 317 expiration. All right. And that's key. The reason I got a Friday expiration while it was a Wednesday when I could have got a next day expiration is because although I don't go deep into counting up all the Greeks, I know that if SPY doesn't make this move tomorrow, if I have a 317 expiration, even if it consolidates, yes, I'll be down on a position, but I still have a chance to be profitable when it makes that move up. However, if I have a 316 expiration, theta is going to be tearing up my contract as I'm slowly looking at my contract, hoping that the SPY moves up, right? So I'm protecting myself, right? So when you're buying time, it's like insurance. You're paying premium, you're paying a little extra, but I would rather be in a trade, have an extra day, and if my trade is wrong, if it shoots back down and I see it's not coming back, I can cut the trade, right? But I don't want to be right but missed the move because I had one day too soon on my expiration. And I also don't want to be in a fist fight with theta because fist fight and theta usually don't work. When you go head to head with theta, theta gonna knock you out, right? How do you fight off that theta? Get an extra day, get 2 extra days, get an extra week, right? And I'd rather secure 30% and be like, dang, bro, if I had a 0 DTE or if I had one day out, I would have had 50, 60. I'd rather secure 30% on that than have been wrong and lost a lot more. Right? The name of the game is to leave with money. Right? Whether it's a bunch of money, whether it's a little bit of money, at the end of the day, you're just trying to make money. And of course, we want more money, but we have to play it smart. And we have to do the stuff that beginners, we have to do the opposite of what beginners do, right? You know, most beginner traders are like, ooh, I want to get the closest expiration as possible because it's going to give me the biggest gain if it hits, right? Think a little outside of it. Think outside of that. Let's keep going. So I took that swing, right? Do-do-do. We closed, and then we gapped down. Okay, I'm going to talk about the swing management, and I'm going to also talk about the new trade I took, the day trade, and that ran over 300%. I got out at a top of 150. But this swing trade, we gapped down. My contract was down 33% at open, okay? Somebody else who told me they had a different contract than me, they had got the one-day expiration. I think they said they were down 60% at open, right? Here's why I didn't sell this contract, even though we gapped down, right? We closed here. So let's show it. We closed here. And then the next day, we gapped down and opened down here, down $2.50, right? Another thing, boom, I would have been down a lot more had I had that one-day expiration. And that's what causes people to cut too soon, is because now I'm trading the price action. I'm trading the P&L and the percentage of the contract and not the actual price. So why did I hold this when I opened up and I was down? All right. The reason I held is because I laid out this level right before market open. And I sent it to the group in the Discord. Check the time, right? Sent it out. I said, cool. I was on a 5-minute chart. And I said, as long as we do not break these lows here and close below them on the 5-minute, I'm staying in, right? Because I understand that this is just like before, right? We have bounced off this level and we bounced off this level. And so I'm like, all right, cool, bro. I am looking to see whether or not we still respect this level this day. If we don't respect it, I can close the trade, fine, right? I don't want to lose, but I'll accept it rather than stay in it and lose a bunch more money, holding it and hoping it flips. I'm not going to cut prematurely if it respects it, right? And so a 5-minute close is where I'm looking at getting out at for a loss, right? And we did not get that. So even after this pullback, right here, it respected it. Right, respected it here, respected it here, respected it there, respected it there. Right, all of those levels is respecting it. Okay, cool. So that's why I hold the trade. And as y'all know, SPY took off. Right. Now let's go to the day trade. That was the swing. All right, and that was a short-term swing. Let's go to the day trade. Somebody asked, it didn't retest the level. Is that why? Oh, so the reason I didn't get out, if that's what you're asking, is because it did retest, and that's fine, right? We have to understand. I'm gonna zoom out for a second. We know how price moves, right? These are things that we know. We know that the stocks don't go up in a straight line. We know that a stock can go up, but in that period of going up, we understand that this movement up also comes with the pullback, right? And then it moves up and it'll come with the pullback and it'll move up, right? We know this. So because we know that the stock is going to have pullbacks in either direction, even when it's going down, right? When it's going down, you say, dang, SPY went down, over the past months, right? Yeah, it went down for the months, but in that, down, up, down, up, down, up, down, right? So if we know that the stock is going to have moves back, then I'm expecting that and I'm prepared for that. And as long as those don't break and hold below those, or those don't make the inverse of what I'm looking at, right? How we talked about earlier, these highs are getting lower, these lows are getting lower. I'm good as long as that's happening. These highs are getting higher, these lows are getting higher. So we're going up. It's when we start making lower lows or lower highs, right? Okay, yeah, we're flipping. And even then, sometimes it will still just be pulling back to a previous level. And so we can still wait to see if it respects that level, right? Let's go back down. So that's the swing, okay? And my target, I averaged into the position. So I lowered my cost of the position. And my target was just the gap fill. I went ahead, dropped the swing, and I entered the day trade on it. So we hit the gap fill. I went ahead, cut. Okay, I got in the day trade. All right, so let's look at this day trade. I called this out in the chat as well. So here we are on SPY. Right now on the 1 minute, it did break through, came back, retest, right? But I was on the 5 and now I'm on the 1. I got in at 9:54. Okay. So let's look at why I took this SPY trade. All right. So one, from me looking at the 5 minute, which I'll take it back. From me looking at the 5 minute, I can see we held this level. All right. We held this level. So I'm thinking we're going to go up to fill a gap, right? Fill the gap that was created post-market. That's what I'm anticipating. That's my main bias. All right. We're holding support. So I'm looking for us to go fill the gap. Okay. We talked about our highs getting higher and our lows. All right. So what I'm seeing is this low, this low, this low, these are getting higher. This high is getting higher. Right. Even with the pullback, this high move up here, if you're looking at it like that, this high was lower, but the next high was higher. And we didn't have a failed, this next high didn't fail to be higher. And this low was higher. Had we made a lower low, problem, right? But if we're not getting them combined, where we're switching from higher high, higher low to lower low, lower high, I'm good. If we have a mix, we're going to let it play out. It's going to start forming some sort of chart pattern, and we're going to see what happens from there. But that's just like a caution, right? But when they both are on the same page and you're in the other direction, it's time to drop it, right? And keep in mind, you can always re-enter a trade. So there's no problem with cutting a trade if it's showing signs of reversal. You don't want to be in calls if it's showing you that it looks like it's going to go down, right? You want to be in puts. So I got in the call in the trade, started moving up, cool. I did take some profits on the move up at 3, I think it was 3, might have been a retest of this level, but it went up. And I was really just ready to let this ride. And I said in the chat, you know, I'm letting this go. So we pulled back right here. All right. And this point, there's something I'll teach on again and talk about more. All right. At this point, people were like, yo, it's dropping, it's dropping, it's dropping. It's dropping. Should we cut? Should we sell? Here's the deal. It can drop. We know, like we just talked about, we know that it's not going to go straight up. It's not going to be nothing but green candles until you get over here. But even this has the pullback, right? So with that being said, we'll get drops. The thing is, we dropped right back to this same level. And we held, we bounced, we came back, held, right? So after that is when we took off. Okay. And we can get more into, you know, sizing and everything, right? If you are oversizing on your trades, you're not going to be able to emotionally and mentally hold through that pullback on a 0 DTE that you entered over here, right? When it's down 30% and you put 75% of your account on this trade, you bad spot, right? When you put an amount on the trade that you can allow to yourself to manage it based on the chart, then you're in a position to actually let it play out and you can maximize your profitability and still remain calm throughout the whole time, the whole thing. So we get the pullback, we hold the level, right? I zoom out to bigger time frame. Okay, cool, we're holding the level, not really tripping. And from there, we take off. And that's kind of all she wrote on that one. I did end up getting out. Um, I had my targets at 390, 391, 393, and 395. All right. And if we zoom out, we can kind of see where those came from. All right. So here's my 390. Is this candle? Somewhere over here. It was one of these candles that gave me my 393. Yeah. So here's where I got my 393 from. Is these candles here. And then we have the 395, which is this, the high of this candle is 394.92. So just about 395. And then that was it for me. You know, I wasn't thinking it was going to keep going crazy, but it did. So that was a day trade. As far as managing day trades, because of course we're not going to always get something like that. The market has been making some pretty big moves lately, but the same thing that we just looked at on both of the other trades still comes back into play here. And that's the concept of looking at your higher highs and your higher lows that are coming in. And so when we look at that, we see that we have lows here. All right. We get another low. My bad. We get another low here that is higher than this low. We get another low here that's higher than that low. We get another low here that's higher, right? So we are allowing the trend to carry us in our trade. Another thing that you'll hear me say all the time is I don't use percentage-based stop losses that often, very rarely. And I don't use percentage profit targets. Very rarely do I do that. The main reason is because I like to let price guide my trade. I got in because of price. I'm going to get out because of price. I'm going to get out when my trade is invalidated on the chart. All right. As long as I'm right, I'm not getting out. All right. The thing that that's the reason I don't have profit percentages where I completely get out of the trade. 10%, 20%, 50%. I don't like to do that. And here's the reason, right? Or how you can relate to something else. If you're betting on a basketball game, all right, and say you're betting on, you know, Jordan and the Bulls, right, back in the day, and they're playing against some screw-up team with a bunch of bozos. Okay, if you got money on Jordan and the Bulls, and if you know anything about sports betting, you know you can cash out early and get some of the money that you have won so far based on the odds, right? If you don't know, when you bet on sports, you can cash out early, but it won't be your full cash out because the game isn't over, right? But if it's leaning one way, you can cash out early. So if you put $1,000 on the Bulls to win, and if they win, let's say you make 1,000 in profit, and Jordan's killing his team, right? They're up 30. If you know that they're up 30, you know the team that they're playing isn't going to come back from being down 30, and you're currently at $500 profit out of your 1,000 possible, why would you take the bet off? Right? If Jordan's having a breakout game, if the star on the other team gets injured, and there's no way these people are coming back, why would you take off your trade when everything is indicating to you that you're going to continue to make more money and continue to have success? You wouldn't, right? You would only do that if you were fearful that somehow the other team would come back. And just like the charts, if you get signs of a reversal, then you can take the trade off, right? You don't have to lose. You don't have to give back all your gains, right? If it starts in here, we're not going to hold it all the way back down here. You go ahead and cut it. Lock in the profit that you have, right? So it's that same idea. You want to let the trend carry you. That's why it's usually very important to try to trade along with the trend, especially on multiple time frames. But all in all, you want to make sure that you allow the trade to move in your direction, because that way you can get bigger gains and you can risk less capital, right? To make $100 with $1,000, you need 10%. You can also make $100 with $500 and just get 20%. right? And now you've put less capital out there. You can make $100 with dollars and get 100%. And I used to tell people, don't shoot for 100%, right, on your trades. And the reasoning is because people kind of shoot for 100% blindly and just hoping that it can happen, right? When you trade strategically and you look at the chart and you're back here and you say, okay, right, let's take it to a 10-minute, for example. And you look at your chart and you say, all right, we're holding this as a triple bottom here. We're holding this heavy support. We just moved and took out this candle. All right, I'm getting in calls. We've been making higher lows, like we're moving up. And you say, I'm gonna just let the trade carry me. And even if you have whatever method, right, you develop methods. One of the things I like to do on a bigger time frame is 2 consecutive lows being broken on the candle. So what that looks like is, if this is my entry, well, currently my stop loss might be here. All right. But once we get this candle right here, my new stop loss is the low of this candle. Can't believe I'm telling y'all this right now. All right. We get this new candle. Let me take it back. Boom. All right. One of the ways I like to do this, that's just kind of easy. We get a new candle. Boom. Go 2 candles back. All right, cool. That's my new stop loss though. New candle, new stop loss. New candle, new stop loss. Bam. All right, new candle, new stop loss. And so I'm letting the trade and letting the trend of the market carry me up and allowing me to maximize my profit rather than me just cut it because it went up 5%, 10%, whatever, and then possibly missing out on this, right? And of course, you can get back in, right? So if you have the ability and knowledge to get back in, then you do that, right? But that new stop loss, boom, new stop loss, boom, right? And that's going to protect me from, if we start reversing, I'll already be getting out the trade. New stop loss, boom. And I've done a video on this before, and you can find it on YouTube where I've talked about this, right? And then, cool. We take out this low. We actually test that low. If we took it out, okay, cool, close the trade, right? And even though it showed as support, and so now you can look at getting in on the break of that high, right, for re-entry as a whole new trade, you still secured your profit after this huge move up, and you let the trade carry you all the way up, right? Instead of being in a spot where you're sitting there looking like, dang, bro, I missed the trade. I saw it. Oh, man, I got in calls and I was right, but I closed it too soon. Like, I'm going to go ahead and hit y'all. I'm going to still scroll up. Put a 1 in the chat if you've ever recently, let's say this week, if this week, put a 1 in the chat if this week you got in the trade and you closed it too early and you were right. And you got out 15, 20%, whatever, and you saw it take off without you. And I see a lot of ones coming in. That's somebody said that same SPY call, right? This is how you prevent that. And you have to understand and accept with yourself that it's not going to be perfect. You're not going to make 100% every trade. You are going to lose on some trades, right? But if you position yourself where you're consistently getting bigger gains than your losses, then you're going to be good. The problem is when you let your gains become very small, because you're like, oh, crap, I got 10%. Let me go ahead and clock that in before I lose it. And your losers go down 10, 20%, 30%, 40%, 50%, 60%, 70%, 80%. But you cut your winners immediately 10%, 20%. Twos in the chat. Did you do that this week? This week, did you cut the winners quick and let the losers run? Two. Somebody with a bunch of twos. Right? That's moving in reverse. You hustling backwards. They said all the time, that's hustling backwards, right? Think about if you go 50%, say you a 50% win rate. If you go in 50%, but every time you win, you only get $1, and every time you lose, you give up $3, you are never going to be profitable. Never. Even if you had a better win rate, right? I don't know how the math will work on it, but even if you had maybe a 70% win rate, you get what I'm saying. If you're winning $1 but giving back 4, you're not going to be profitable. And that to itself will probably be a whole nother class, is why win rate matters, but don't try to force win rate in your mind over profitability, right? And again, this all really comes back to 1, trading the chart and trading the price action. 2, having a strategy and a plan that you follow when you enter the trade, and you already know in your mind, if this happens, I'll do this. The same way when this swing happened, and I put it in the chat before market open, hey, if we close on a 5-minute candle below this level, I'm cutting the trade. If this happens, I will do this, right? And because I know that, then I can go ahead and let the trade do what it needs to do. And if I'm wrong, I'm wrong. I'm going to wait till I have a new setup, and I'm going to go get my money back and then some, right? And because I'm not shorting my winners, I can take a minus 40% on a trade and a minus 20% and then grab a plus 200 and be like, cool, right? Yesterday, I had the 150%. I had another trade that was positive. I had like 3 trades that were good. And then I lost today, maybe like 40% or whatever. And doesn't even matter. Doesn't even matter. 200% minus 40% is 160. Still up 160% on the capital I traded with, right? Even if I lost multiple trades, it's fine, right? So you have to make sure you have a balance. You have to make sure you have an understanding of how you're going to move through the market. Approach everything with a plan. Approach everything with a